right, we'll buy the stock and ditch the management. Veteran banking analyst Dick Bove's take on Goldman Sachs. Dick joins us now to discuss. Dick, thanks for being here. Appreciate it.
Thank you, Poppy.
You know, we saw strong numbers, better than the street expected from Goldman on their earnings this morning. You've still got, though, huge fraud charges, a big battle ahead. What's your take overall on what investors should do with Goldman stock right now?
Well, you know, I continue to be a buyer of the stock, and the reason why I want to buy the stock is because I believe that no one can replace Goldman Sachs in the marketplace when it comes to trading securities, no matter what those securities are, whether they're currencies, commodities, fixed income, or equities. And that's because Goldman over the years has spent a couple of $2 billion to build up trading systems to assist its customers. And as I say, that is such a strong position that this company has in the marketplace that I think it's worth buying into it.
You say buy the stock, and therefore you have faith that clients aren't going to walk away and that their business isn't going to flounder, but at the same time, isn't this an issue of Goldman angering not only the American public, but some of its own peers on Wall Street, those that bet on the long side of this investment that Paulson was short on? I mean, doesn't it it has to tread very carefully when dealing with others on the street, right?
Well, yeah, you're certainly correct. I mean, in other words, you know, while the trading business is solid, and in this quarter was 72% of all of Goldman's revenues,
sure,
the other 28% comes from businesses like investment banking and investment management, where you do need to have the goodwill of your clients, your peers, et cetera. And I think that the question being raised about the company today specifically, is whether they've demonstrated that they've done enough to maintain the commitment of those people. I think it's going to be at least a year to 18 months before they demonstrate convincingly that they haven't lost customers in those other businesses.
Well, and you've said, listen, CEO Lloyd Blankfein and CFO David Viniar have to go. Really?
Well, they don't have to go, but I think that essentially there is one major error here. I don't think the error is, you know, this transaction that the SEC is concerned about, because, you know, there are only two buyers of that particular set of CDOs, and they're knowledgeable buyers. What I think the error is that Goldman has never explained itself to its customers or the public as someone who provides a societal benefit. In other words, I think it can be demonstrated that because Goldman distributes, if you will, government securities, taxes are lower. Because of the activities in the derivatives market of all firms, there's lower interest rates. Because they raise capital for businesses, there's more jobs, there's more business opportunities. But they don't talk about those things, so all we have is a company which is pictured as being a bunch of greedy bankers who are involved in fraudulent activities.
And they don't have the association with the proverbial Main Street in that they're not a retail bank, so you don't go to them for your mortgage. So the American public has they don't know what to think of Goldman, it seems.
Well, that's exactly right, and therefore the obligation of people like Blankfein and Viniar is to explain the company to the public with advertisements on national television to let them know what it is that Goldman does for the United States, because they actually do quite a bit for the United States. But if you listen to most of the commentators yesterday, one of the core issues they kept raising was this company provides no benefit to anyone except themselves.
And overall, the banking sector, you know well, you look at a broad range of companies. Looking at what this means, the SEC fraud charges against Goldman for the broader banking sector, any concerns there that this is a tip of the iceberg?
Actually, no. I mean, I think that if we think about the fact that this investigation started in August of 2008, and we're sitting here in April of 2010, and all we've had, you know, as a result of this long period of investigation is a fraud charge or a charge of inappropriate action on the part of one company on one transaction, would suggest to me that they haven't really come up with anything meaningful.
So not concerned as far as the whole sector.
The concern is that they keep coming up with things. In other words,
sure,
if let's assume they decide to go after J.P. Morgan in 2 weeks, or Morgan Stanley 2 weeks after that, and Bank of America 2 weeks after that, if they keep pounding away at the American financial system, they'll do what they did back in September of 2008. They'll remove all confidence in the system. If the SEC or the government's goal is to prove to the world that the United States financial system is corrupt and doesn't function properly, that's the way to do it. And if they do it, what do they gain?